Hi traders, in this lesson I'm going to be showing you how I created my Pinbar strategy script. So this script trades hammers and shooting stars. It's based on a YouTube video by my main trading mentor, Stephen Hart, the guy that sort of taught me how to trade Forex and got me from a consistent loser to consistently profitable. This is a strategy that he sort of built around an Investopedia article of all places. He found the definition of a hammer and star strategy on Investopedia. I'll leave a link to his video below this video. And he managed to convert the rules that they had on their website into an actually profitable strategy, at least on some Forex pairs. Now, full disclaimer, this strategy performs best on Oanda's price data for whatever reason. It performs well on other brokers as well, but especially well on Oanda. So this is kind of an obscure strategy. If you're not a Forex trader and you're not a user of Oanda, you may struggle to find this strategy to be profitable. However, I have included a bunch of settings you can tweak here that may allow you to come up with some parameters that are profitable on other markets. For example, this EMA filter is disabled by default, but if you set it to any number other than 0, it will add an EMA filter onto your chart so that now it's only taking short trades below this EMA and long trades above this EMA. If I can find a long example. And that dramatically improves its win rate on certain markets. So those are some things you can play around with. So in today's lesson, we're not going to do anything particularly advanced. We're not going to add automation to the script just yet, but my plan is to demonstrate to you guys a handful of profitable trading strategy scripts that I've used in the past to trade the Forex markets. And then in future lessons, we'll add to these scripts. We'll build on these scripts to make them more advanced, more complex, more useful. For today, let's keep things extremely simple and just build out this script that you see here. And let's get started with some coding. So first things first, here we have a essentially blank strategy script. All I've done here is define a strategy. I've set overlay to true, so we're drawing onto the chart. We have a short title, a long title. I'm importing my Zen library just for convenience. There are a bunch of functions that I use across all of my strategy scripts, and this library contains those functions. This will just save time as we build out these scripts. You don't need to use my library. You can go and copy and paste the code out of the library, convert it into regular strategy script code so that it's not an exportable library function if you don't want to import my library into your scripts. But for now, I'm just going to keep importing my library just because it saves a lot of time in terms of recoding certain functions that we keep over and over. And once again, if you haven't watched the lesson where I break down the source code to the Zen library, make sure to go and watch those if you want to understand what these functions I'll be using in this library do. But moving on, we then get a bunch of user inputs. So we have two groups of user inputs. If I open up the settings menu, we have our strategy settings and our filter settings. So the strategy settings we have to work with are an ATR minimum filter size. And in fact, I don't know why I left that in the strategy section. Technically, since this is a filter, it should go in the filter section. So let me say that code again, and let's have a quick look at how this looks. Oh, and I need to change my group parameter here to G_filter, which is this string here. That's why I separate my groups. As you just saw then, it was easy to copy and paste those two inputs. And instead of typing out filter settings in both of these, I just paste in the G_filter variable name. So now when I save my code, open up the settings, we have our strategy settings and our filter settings separated. So our strategy settings are, we have a stop loss there. This is just an ATR based stop loss. So 1 means 1 ATR above and below the swing high and low of hammer and star candles. RR is short for risk reward profile. You can see I have a bunch of tooltips here explaining in detail what each setting does. This is actually a publicly published script on my TradingView username script library. So I did go the extra mile with this particular strategy and added a bunch of tooltips that explain in detail what each setting does. The next setting we have is fib level. This is for determining whether or not we have a valid hammer or star candle. Here's a good example right here. This big green candle you see right there. If I get my fib tool, Fibonacci tool, and I draw from the high of that bar down to the low of that bar, and we look at this red line, if I double click on my fib tool and I turn off all of these other fibs, what this setting does, this fib level, is it tells my script where I need the bar to open and close within the zone of the candle in order to be considered a valid hammer or star candle. So in this case, by default, it's set to 0.333. That means that I need my hammer or star candle. In this case, this would be a shooting star, even though it's a bullish green candle, because my rules state that if the bar opens and closes below this 0.333 Fibonacci level of this candle, then it's considered a valid setup. And vice versa for long trades, it would be from the swing low of the candle to the swing high. This bar right here would not be a valid hammer candle because it opened below our red line, our 0.333 level, or the upper third of this bar. Because the open was below that upper third, this is not considered a valid hammer candle unless I were to change my indicator settings to something like 382. Now it would be considered valid. So that's what the fib level input does. Next, we have a bunch of filter settings. We have the ATR minimum filter size and the ATR maximum filter size. So what these filters do is, if this was set to a positive number, the size of the signal candle must be at least the same size as this times the ATR. So if I put a 1 in here, then that means that the candle must be at least 1 ATR in size. And we just use the default 14 period ATR to dictate whether or not this filter is met. The next filter here is the maximum size of our entry candle compared to the ATR. So by default, it's set to 3. That means if we get a giant hammer candle here that is much bigger than 3 times the average true range over the past 14 bars, then it's invalidated. That's to stop us from entering on gigantic bars. You see, this strategy is designed to be traded on the daily chart, and so if we enter on a massive hammer or star candle, we could be in the trade for several months. And so to avoid that, we simply ignore any setup candles that are massive. Moving on, we then have our EMA filter. I already explained what that does. Then we have our start time and end time filter. So this allows us to specify a start date and an end date to filter our trades between. So for example, if I wanted to test the past month and a bit of data, so if I wanted to test since the 1st of January, around here, the 3rd of January was the first trading day, I could set our start date filter to 22. You can see this vertical line here. The end date filter is set to 2099 by default, which means it's essentially disabled until we get to that year. I imagine I'll be long dead by the time we get to 2099. And so essentially this end date filter is disabled by default, since every bar on our chart will be before 2099 until we get there. And so that's our start date filter. We can also specify the time of day on these dates to trade between. And those are our user inputs. So let's move on to our actual strategy code. I'm just going to copy and paste the code over block by block and explain each block rather than code it out in real time. Just to save time, I think you guys should be pretty familiar with PineScript by now, and you shouldn't need me to walk you through every single character in the code. I think we can safely just start copying stuff over and explaining it. So this is our date filter. This is a Boolean variable that is set to true only if the current bar's time is greater than or equal to our start time date filter and less than or equal to our end time date filter. So if the current bar falls within these two dates, then date filter will be set to true. Next up, we get some indicator values. So for this particular script, we need the ATR value. We just use a default 14 period ATR. It's hard coded, so you can't change it in the settings menu. If you wanted to, you could add an option to change this in the settings menu. I don't think it will make much difference to the strategy, the way it works. So I just hard coded it here. And then we get an EMA, an exponential moving average. But there is one slight difference here between getting a regular moving average, in that we have our EMA filter here, which is set to 0 by default. So we have a 0 period EMA by default. If we try to get an EMA with a period of 0, the script will crash. It will fail to run. Watch what happens when I click save now. We get an error up here in the top left. We're not getting an error now. Maybe we need to plot it. Let me try plotting it. There we go. Now we're getting an error. If I click on this little study error. It says invalid value of the length argument 0 in the EMA function. It must be greater than 0. And so the way this script works is if our EMA filter is equal to 0, then we get an EMA with a 1 period length. Now, if EMA filter is equal to 0, we don't ever use the EMA value in our script, so it doesn't matter what we calculate, just so long as it's some sort of number that doesn't give us a runtime error or compile error. So if our EMA filter is set to 0, that means our EMA filter is disabled, so we just get a 1 period EMA. Otherwise, if our EMA filter setting, this setting here, is greater than 0, if it's set to anything other than 0, then we get an EMA with that period length. Later on in the script, we use these two values to filter out potential trades. And that's what we do next for our EMA filter. So if I paste in this code here, now we check our EMA filter. We have two variables here, two Boolean variables, EMA filter long, EMA filter short. These filters are set to true. If the EMA filter value is equal to 0, that means we've disabled our EMA filter and these filters will just return true. Otherwise, if EMA filter is not equal to 0, then we check, is the current bar's closing price greater than the EMA value for longs or lower than the EMA value for shorts? This is one of the most simple trading filters you can add to a script, but you'd be surprised at how much it can affect the accuracy or the efficacy of your strategy. So that's why I included it here. Simple EMA filter to make sure that we're trading with momentum behind us, some sort of momentum filter. Surprisingly, this script does still work. This strategy is still profitable even without a directional filter. So if you just take every hammer and star candle on this daily time frame on several Forex pairs on Oanda, over the past 10 years of data or however long historical data goes back on this daily chart, it has been profitable on several pairs, which I found quite interesting and surprising. It just goes to show that sometimes simple is better, and you don't always need to have several complex filters and market conditions laid on top of each other in order to find an edge over the markets. But anyway, moving on, we then check our ATR filter. So if I paste that code in here, we have two filters here. We have our minimum filter and our maximum filter. So the first thing we do here is we subtract the low from the high. That gives us our candle size in pips or points. And then we check, is that candle size greater than or equal to the ATR minimum filter size multiplied by the current ATR value. So that's this setting here. So is the current bar's size greater than this times the ATR value? If so, then our ATR minimum filter will be set to true. Otherwise, if ATR min filter size is set to 0, so if this is 0, then this filter is disabled and we're not using it. And so this just returns true anyway, regardless of whether this condition here is met. And then same for our max size filter. We just check if the current bar size is less than or equal to our max filter size times the ATR, or is the filter size disabled. Then we combine these two filters into one ATR filter variable called ATR filter, and we just check, is this filter true and is this filter true? If one of these fails, then ATR filter is set to false. Next up, we detect or determine if we have a valid setup. So we have valid hammer and valid star here. And valid hammer is set to zen.control space is hammer. And then we have two parameters here that we can input, our Fibonacci level and whether or not the hammer candle must be green. If color match is set to true, then the hammer must be bullish. If it's set to false, then it can be green or red, just so long as it opens and closes within this fib level of the bar. So in here, we can pass in our fib level. By default, color match is set to true, so we don't need to override that parameter there if we don't want to. You could add an input if you wanted to the settings menu to turn on the color match if you want to make sure that the script only trades green hammers and red shooting stars. In my testing on this particular strategy, I didn't find that to influence the win rate enough to justify adding that feature, so I just leave it out. But if you want to, you can add that. Next up, we get zen.isStar. We pass in our fib level, and now this code will get any valid hammers and stars on our chart. But we also need to include a couple of our filters here. So the first filter I want to check is, do we have a hammer candle pattern? And is the ATR not NA? So we need to have an ATR value in order to calculate our stops and targets. If we don't have an ATR value, that means that we detected a candlestick pattern that was valid. However, it was detected in the first 14 bars on our chart, and we don't have an ATR value yet. If we don't have an ATR value, we can't calculate our stops and targets, and therefore we don't want to enter any trades, because a trade without a stop loss is a recipe for disaster. So we check that first, and then we check, and is our ATR filter true? So have we passed our ATR minimum and maximum filter? And is our EMA filter true? So and EMA filter long for hammer candles. That's this line of code here. If all of these conditions are met, then we have a valid hammer. I'll also add on one more check here that says and close not equal to open. We don't want to trade dojis here. So if we have a hammer candle that looks like this, where the open and close is the same price, then we don't want to trade that, because I found it to be more profitable to ignore those trades in my back testing. And now we can do the same for our stars, shooting stars, and not NA ATR, and ATR filter, and EMA filter short, and close not equal to the open. You could add the ATR filter to this if you wanted to. Maybe we'll do that actually. Just to avoid redundancy, we can say and not NA ATR and get rid of these two checks here. I think that makes more sense. Now we combine all of our ATR checks into one Boolean variable, and our code is just a little bit neater. There's one more filter that we need to add here. We can say and date filter to add our date filter into this. So now we will only detect valid hammers and stars if all of our conditions are met. We have the candlestick pattern and all of our filters are met. Then we have a valid hammer. However, we do not have a valid trade until we have confirmation of our setup, and that includes checking to make sure that the bar has closed and is confirmed, and that we are not already currently involved in an open position. So to do that, I'll create two new variables here, valid long and valid short. Valid long will be set to, do we have a valid hammer and all of our filters met? And is our strategy.position size equal to 0? So we're flat, we don't have any trades open. And our bar state is confirmed. So the bar has officially closed, all of our conditions are met, we're not currently involved in a trade, then we have a valid long setup. Same for short. Do we have a valid star? And I can copy this code here. And there we go, we have our long and short signals being detected. All that's left to do now is calculate our stop loss distance and take profit, and then enter our trades into the strategy tester. So let me copy this code over into here. Calculate our, I'll just call it stops and targets for the current bar. And then if we have a valid setup, we'll save these values into VAR variables, persistent variables, to draw our stops and targets over the chart until our trade is stopped out or plays out profitably. So this code here should look familiar to you by now if you've watched any of my previous lessons on drawing stops and targets to the chart. The first thing we do is calculate our stop loss size in pips by multiplying our stop multiplier by the current ATR value. Then we need to check, is the current bar lower than the previous bar? If so, then we use the current bar's low as our anchor point and we subtract our stop loss size from the current bar's low. Otherwise, if the previous bar is lower than our current bar, then we subtract our stop loss size from the previous bar's low. These are the rules that Stephen Hart came up with when he was adapting the Investopedia strategy into a profitable Forex trading strategy, and I've just copied them here. And then the next thing we do is calculate our long stop distance in pips by subtracting the long stop price from the closing price. That gives us our distance from our entry. Let's say we entered on this bar here for whatever reason, and we had a 10 pip stop loss that put our stop loss here. Then once we calculate that distance and we have 10 pips, we can add that or subtract it, in the case of a short trade, from our entry to get the same distance, one-to-one risk-reward profile, multiplied by our risk-reward profile in the settings menu. And then we do the same thing for our short trades. So this code here calculates our stops and targets for the current bar. The next thing we need to do is prepare a bunch of VAR variables to save our trade stops, targets, and position size, which we are not using in this script. We'll get to that when we convert this script into an automated strategy. But for now, we just want to save our trade stop and target if a valid setup is detected. We also don't need direction for this particular version of this script. So those are the three values we need in order to proceed. And the next thing we do is enter our long and short trades. So I'll start with the long trades. Let's copy that code over. So if we have a valid long, if this variable is true, then we execute all of this code. We reassign our entry price, our persistent entry price variable, to the current closing price. If you're using this particular kind of strategy on stocks and you need to enter on the open of the next bar, you could do something like this. If the previous bar was a valid setup candle, then we enter on the open of the next bar, and you need to calculate your stops and targets based on the previous bar as well. But for now, we'll keep things really simple. Since we're working on Oanda's price data, we can actually enter on the closing price of the previous bar. Unless we get a valid trade on a Friday and we have a big gap on a Monday, this should work just fine. And that is a rare occurrence in the Forex markets, especially on Oanda's price data. So the first thing we do is assign the closing price to our entry variable, our persistent variable. Then we save our long stop price. Then we save our long target price. Then we enter our trade. We enter with an ID of long, a direction of strategy.long. We enter when we have a valid long. That's a redundant parameter call there. We don't need to put that in, since that would only be useful if we had this entry function extracted from the if statement scope in our main script, but we don't need that. The next thing we have is our comment. So the comment here is just telling us what our stop loss size is in pips. This is useful for backtesting purposes, in particular for manually analyzing this data in a spreadsheet. I'll leave this code in for now because we might as well. In a future lesson, we'll cover backtesting in more detail and how I go about that process. But for now, this will do. We are entering our long trades when we have our long conditions met. The next thing you can do here is fire any alerts if you wanted to. You could use the alert function to trigger any alerts. This is what I do in my automated scripts. I need to send this data to a third-party API. For today's lesson, we're not doing that, so I can get rid of that comment for now, and this code will do. This is just the foundation of our strategy script that we can then go out and properly backtest to confirm it works. Once we confirm it works, then we can go to the trouble of adding all of that automation code. So the next thing we do is enter short trades. It's exactly the same code, just to the short side. So we're saving our short values and entering short. I can get rid of this when parameter again. And that's it. The next thing we need to do is exit our trades when our stops or targets are hit. So if I copy this block of code over, this should look familiar to you by now. We're just using two strategy.exit functions to exit our long and short trades. From our long and short order IDs, we set our profit limit target to T_target, which is our persistent saved variables. So on every bar in our chart, once we enter a trade, we can check if our long stop or our long target, in the case of a long trade, is hit on every single bar. So remember, this is in the main scope of our script. So these two functions will be called on every single bar in our chart, but it will only be called, it will only execute its checks. It will only check our stops and targets when our position size is greater than 0 for long trades. So we have a positive position size, or less than 0 for short trades. So if we're short, we have a negative position size. So now we are pretty much done. The last thing to do is add some drawing data, draw our stops and targets and detect signals with shapes and stuff like that. But for now, if I save my code, hopefully I haven't made any mistakes. If I have, we'll fix them, but we'll have a quick look. And there we go. No mistakes. Everything is fine. And if we open up the strategy tester, you can see we have a 56.25% win rate here. If I reset the settings to the default settings, we have a 58% win rate. So in between editing the code, TradingView does now save your settings. So if I change these around like I did earlier, when we make changes to the code, those changes will be saved. So it's a good idea to reset your settings to default when you're done playing around with your script to make sure things work. And now we are pretty much done. Let's just add some drawing code so that we can see what's going on visually. So right now we're just plotting nothing onto the chart. We need to plot our stops and targets. So if I paste that in here, this will check if our position size is not equal to 0, so we are currently involved in a trade, or we currently have a valid setup on our chart, a valid long or valid short setup. If that is the case, then we draw our stop loss and our target. Otherwise, we draw NA or nothing. And then I just title these plots and give them a color of red and green for stop and target, and use the style line break style. Then we also need to draw our EMA, if it's enabled. So if our EMA filter is equal to 0, then we draw nothing because we have that disabled. Otherwise, we draw the EMA value. And then we just change the color of the EMA based on whether the price is above or below the EMA or our EMA filter long. If EMA filter long is true, then it's green. If it's not true, then it's red. We give it a line width of 2 and title it. And then finally, we draw our price action setup arrows. And to do that, I'm just using the plot shape function. We only draw it if we have a valid long or short setup. And we have a style of triangle up and triangle down. I set the locations based on long or short. Same with the color and same with the title. Now, if I get rid of that white space, save our code, minimize the editor, reset my chart, we should be getting setups being drawn, red arrows and green arrows, and our stops and targets are drawing until one of them is hit and the strategy tester takes us out of our trade. And that is pretty much it for this lesson. We have a profitable hammer and star strategy coded in Pine. And if we go through some of these markets, I've highlighted the ones that are most profitable. This strategy appears to be profitable on quite a few markets, but it is particularly profitable on Aussie dollar. Swiss yen has a decent win rate. Now remember, we have a 1-to-1 target, so anything greater than 50% will be technically profitable, so long as it's a decent amount of win rate past 50. So what I mean by that is if you have a 51% win rate, when you add up all of your commission costs, slippage, and the general cost of trading, even though it's technically profitable on historical data, in real-time data with real-time market conditions, it might not be profitable. But a 58% win rate with a 1-to-1 target is definitely going to be profitable. Same with the 55%, a 57%, and a 55% there. There are a bunch of other markets where it is somewhat profitable, but on some of these markets, it definitely performs better than others. And if we have a quick look at our filters, we can tweak these to whatever we want. We can add in our EMA filter here and our start date filter. So for example, we could see how this strategy performed during the 2008 financial crisis if we wanted to, by putting in a year or two either side of that meltdown. But for now, if I click OK and we open up the strategy tester, we can see how adjusting these parameters affects our win rate. We can also change our risk reward profile. And now you can see that it's actually profitable on Aussie CAD by simply adding an ATR filter, minimum ATR of 1 and a EMA filter of 20. We now have a profitable strategy on Aussie CAD, but we're not taking many trades. That's a catch with a daily chart strategy, especially one like this. It doesn't take many trades, but it has been profitable technically since, if we go back to the very first bar in our chart, for some reason, some pairs don't have wicks past 2004 or 2005. So we go to 2005. Here we go. Here's our very first trade, which lost. However, since 2005 until now, this strategy has had an edge over the markets. Not a big edge. You're not going to make millions of dollars trading this strategy on the Forex markets. However, by adding it to an existing portfolio of strategies, it can be a really low maintenance and easy way to make money depending on your trade carry costs, commission costs, swap rates, and all of that stuff. Remember, all of this is really just for demonstration purposes. I definitely highly encourage you to go out and try and write your own strategies based on anything you've learned about the markets. For now, consider this just a template for helping you get started, writing out a script that enters and exits trades based on various conditions, price action conditions, market conditions, indicator filters, and I hope you can go out and create your own profitable strategies that are much better than this one. But for now, I'm going to leave this lesson here. And in the lessons to come, we'll expand on this information, this knowledge. I'll teach you a couple more profitable strategies that I've used to trade in the past. And then once we're done building out a few more strategies, we'll dive into automating these strategies through third-party APIs. But for now, I'll leave you here. The source code, as always, will be below for you to play around with. And I'll speak with you in the next lesson. Take care.